Wanted to take a look at Apple Stock. AAPL is the ticker symbol, and break down the latest financial numbers that they just released. Now, one of the things I'm focusing on a lot is what's going to happen next with China. Now, some companies have made mention that they see growth rates in China slowing down. Apple gets about 13% of its revenue from China, and I expect that the whole number from Chinese revenue for Apple and many other stocks is likely to continue to contract. Of course, we had the big BK last week. Plus, real estate has really been the driving factor for China's economy. That's now a bust. So what's really going to drive that economy? Plus, you also have birth rates that are shrinking more and more. You've got an aging population and a declining number of young individuals. What is going to propel the economy? These are things that I kind of factor in when I look at, say, Apple stock and break down AAPL. Let's jump in. I'll show you some of the things I'm looking at and why I think, from an analysis point of view, that Apple stock might be a little overpriced, but probably has a lot of sideways action, maybe not a bunch going up or down. Let's jump in. I had someone send me the article on the right here where they're taking a look at free cash flow. And I wanted to break down Apple's free cash flow and how that might affect Apple stock. Free cash flow is yet another sort of metric that I look at. I don't look at too intensely because the one I'm looking for or the two I'm looking for are increases in revenue and overall earnings per share. Free cash flow, of course, you sort of deduct a few things and you get a metric within there. It's important, but it's not a be-all, end-all. And I don't think that it's going to push Apple stock up to 214. One of my friends asked me, he sent this over and said, hey, listen, I know you're going to chime in on this stock. Take a look at this and try and explain it to me. I'll show you some numbers on that. But the big brands are playing the long game in China. This is one that's out of the Wall Street Journal. Barchart did the other article. For me, the big factor is what will happen with the Chinese economy. A big driving factor, of course, was real estate. And now it's that story where we know so much more about it and how that's really going to affect things. I don't necessarily see a big driving factor that's going to put a lot of money in people's pockets and drive the economy, the Chinese economy. Plus, you also have the COVID response. In the meantime, you can see the response from Apple stock here. This is the 1 hour bar chart that I put together to take a look at. The initial response from the earnings release was to sell off, bounced around, kind of came back to about just above where it was prior to the earnings release. Beat expectations on revenue and earnings. Future earning or revenue and earnings were adjusted, but really the emphasis was China. And what I look at from when I break these things down is I'll break down and I'll ask the question, earnings per share yield, and I'll compare that to other things. As you can see here, Apple Inc. versus QQQ. This is the ETF for the NASDAQ 100. And as you can see, Apple's actually been underperforming. Now, say the S&P 500, you got the magnificent 7 stocks, which represent anywhere from 24 to 28% of the total index. Apple's been sort of lagging, but a lot of other stocks have been moving higher. So there could be some room from an arbitrage point of view, but I see Apple stock itself just slightly overpriced when you consider earnings per share yield looking forward. Let's break down the quarterly numbers real quick. 119.58 was Q1 2024 revenue. Projected revenue, 393.6 and then 419.9 for 2025. These are some decent increases higher should Apple hit these goals. Now I've had to reconfigure these, and actually I've seen some numbers for 2025 coming in at 417. Nonetheless, that's still a decent increase, and who knows how much the face masks or goggles are going to do with that. they had some pretty solid sales, about 170,000 units sold pre-order. We'll see how that plays out. Margins across the board were fairly flatline. Operating margins increased a little bit, and that was a positive. Net margins, of course, pushing 28.36, and this may actually be one of the things that are pushing Apple stock to be overvalued. Price to earnings ratio 29.96. Earnings per share 218 for the quarter. And then free cash flow. This is what I want to kind of break down. So what is free cash flow for those who might not pay attention to this? It's a metric. It's important. You can keep it in mind, but it's not a be-all, end-all. Free cash flow, you have a company that has capital needs just to run the business. Then there's capital expenditures. Free cash flow is all the money after those two numbers are factored in. Free cash flow, of course, has popped up pretty nicely, $37.5 billion for Q1 2024. But again, this isn't a be-all, end-all. It really boils down to earnings per share, regardless of what Apple's cash needs, that's taken care of. Their CapEx expenditures, they've got a lot happening with AI, of course, and that's really going to play out in the future. But those are already factored in as well. Again, for me, it goes back to, okay, fine, you factored in those numbers. What are earnings per share and earnings per share projected? 657 for 2024, 718. I have seen 716 for 2025. Nonetheless, a pretty decent move higher. That 657 I want to take a look at. Treasury yield 4.025%. Of course, the U.S. Treasury yield has popped up a little bit higher. It's actually 4.125% right now. SPY yield just at 5%, just sub that. XLK yield will likely go below 3%. These are, when I factor these in, for those of you who don't follow me on a regular basis, yield. I take one share for the S&P 500 and all 500 stocks, look at the next 4 quarters out, add those up, divide over the current price. I don't put the weighting in the S&P 500. I'll add that together. The S&P 500 is just sub 5% at this time. I put this together just at the beginning of the over the weekend, so there's been a shift in these yields. Nonetheless, Apple stock AAPL 187.68, only 3.5% yield considering in the next 4 quarters, the 657. That's not terrible. It's the 10-year Treasury is trading 4.125% and likely will remain there and kind of move forward. Now, my big concern, of course, is and I'm going to be really focusing on this a lot, is the growth rate in China. I don't think we're going to see that growth rate really occur much anymore. What's the driving factor? Now, on the one hand, for China, the government kind of controls the banks, and they're just basically going to say, you need to loan money. So the economy is not going to seize up. The intermediary banks are basically controlled by the government, who are basically going to say, get going. So that'll occur. But real estate has really driven the economy in China. And now it's a bust. So what's going to drive things next? Plus you have the response to COVID, which really just pushed economic growth in China down as much as it possibly could. This is the Nikkei 225. Take a look in 1989. That's when the Nikkei in Japan, for those who don't know this and don't understand the story there, the Nikkei 225 hit its peak in 1989. Japanese economy really boomed after World War II up until 1989. Then it was a real estate bubble, basically, that really popped the Japanese economy. It still has not been eclipsed that high for the Nikkei 225. China is likely to replicate that. And just for the record, I got this chart off of Wikipedia. You can find really great articles on the lost decade for Japan. And so if you're interested in an interesting historical read to understand what's happening and how they've been trying to push the Japanese economy forward and not really getting anywhere, that's great place to start. Japan's birth rate is shrinking. Their aging population is a real factor. China is exactly the same thing. Now we take a look at the Hang Seng. This is the Hang Seng index for China. Take a look going backwards. I could actually see the Hang Seng continue lower because of the lack of movement higher in the economy. This will be an X factor as well. And this is what's really going to be sort of the end result. So when we get concerned about Apple stock and growth in China, it's a huge story. And yeah, all companies are probably going to see very low growth rates or negative growth rates coming out of China. Given that, taking a look at Apple stock once again, this is the daily chart. And as you can see, we've kind of just sort of got stuck there. I showed the chart versus QQQ. And for me, when I look at Apple stock, it's a solid buy at a much lower price. Could we see one, say, ranges between 150 and 155, 156, going up to 160? That's a possibility if we continue to get information coming out of China that the economy will be drugged down further and further. Those growth rates in that Apple will be getting out revenue from China may go negative, and that will affect a stock, Apple stock, which is already overpriced at 3.5% yield when you can buy the US 10-year Treasury at 4.125%. This is how I kind of approach my investing from a value perspective. I ask the question, what's the yield? What are the growth rates? China will be a major factor for Apple. Given that, if we do see a dip on Apple stock, that could be a strong buy, but you'd want to see that yield pop above the US 10-year Treasury, which is trading at 4.12%. That probably puts Apple stock sub 160. We were there not too long ago. Will we see it again soon? We'll find out. Make sure to hit the like and follow button. We'll see you in the next video.